Kitco Mining special coverage of the Rural Symposium, Natural Resource Investing, is brought to you by Mining Ventures.
Pointed, controversial, and entertaining. Grant Williams, author of Things That Make You Go, is one of the most listened to voices in the industry. Hello and welcome to Kitco Mining with me, Paul Harris, at the Rural Symposium here in Boca Raton, Florida. Grant, welcome to Kitco.
Paul, good to see you. Two Brits in Florida. What are the odds?
I know, we're going to talk football with the Ashes.
That's exactly what we should want, maybe not with the Ashes.
Well, we can do some sort of number crunching there.
Yeah, right.
I imagine there's many things that we could go into, but I imagine there's many things that are making you go, at the moment. What is the top of your list?
Oh boy, how long have we got? I mean, look, the world is an incredibly complicated and increasingly complex place. And so there are so many things happening right now. Big cross currents, big geopolitical cross currents, financial cross currents. It's really difficult to find a place in the financial ecosystem that's like calm and centered, and you can actually make some sensible decisions about long-term capital. Except to me, commodities, right? Commodities is just about the one place where you can put capital to work, knowing that the sort of life cycles and investment cycles that the commodity market throws up makes sense in a world where there are many, many shifts that are going to happen on every level of the financial markets that will kick you off or throw you out or pull you back in. And so for me, I'm more interested and more excited about commodity markets now than I have been in quite some considerable time.
Okay, well, you and I, we both sort of, to a greater or lesser extent, understand commodities and see the value, see the opportunities there, and see why they're important. Why doesn't the rest of the world get it?
Because they haven't needed to for a long, long time. If you look at what's happened, as everything's become increasingly financialized over the last 30 plus years, all people care about are stocks, right? We want Netflix, we want Amazon, we want stocks that go up, and we don't really care about the companies. All we want are things that go up. Commodities require a lot more time, unless you're going to day trade gold futures, which I wouldn't advise to anybody listening at home. But commodities are the kind of asset that you invest over a long time horizon, and people's investment time horizons have become increasingly shorter over the last 30 years. So it makes perfect sense to me that no one cares about commodities, but at some point they will, and there's no bull market like a commodity bull market. I mean, they're awesome to watch. They really are.
And even better to participate in.
Exactly right.
Okay, you mentioned that there's a lot of geopolitical and financial cross currents. Do you see them sort of coming together, or are they sort of doing their own thing?
They will come together as they always do. It used to be that finance would lead politics. Now very much politics is leading finance. The perfect example of this is going to happen in a couple of weeks in South Africa when the 15th BRICS conference takes place. Since the last one, the move by the US Treasury to sanction Russian central bank assets, in my opinion, was a massive policy mistake, because you've now made it a national imperative for other countries to find an alternative to holding treasury bonds as a reserve asset, which is a massive shift in how the world works and has worked for half a century now. So that geopolitical angle, we're seeing all the headlines about new BRICS currencies, and there's a lot of noise in there, but ultimately the direction of travel is clear. If you are on the fringes of that US sphere of influence, you need to have a plan for the day when it might arrive when you make a decision that the Americans don't like. And so it's not something you can leave to chance. This is national reserve. So that's the biggest geopolitical shift that I see happening, and it's incredibly important.
Is there any way, if it wanted to, that the US government could walk that back?
No, because look, that horse is out the barn now. It's what was the old George Bush quote? Fool me once, shame on you. Fool me, you can't get fooled again. It's the whole, you cannot take a risk now that the Americans will be as good as their word in terms of, we confiscated Russia's assets, but yours are fine. Because who knows, right? You just don't know, particularly with how turbulent the world is. You don't know whose side you're going to be on. You don't know where the sides are going to be, where the lines are going to be on the map. You just don't know. And so this is not like taking a flyer on a uranium company and putting some money to work thinking it might be a 10-bagger. This is your national security interest. So this is not an option anymore for people, but to find a plan B, if you like.
Okay. Now, lots of other things going on. We've had an inverted yield curve for a number of weeks, indicating that a recession is imminent. The big news in the spring, obviously, there's a lot of banking failures. Will we have a recession?
I think it's always a question of probability for me. Is what are the probabilities that we're going to have a recession? I think they're high. It doesn't guarantee we're going to have one, but all the ingredients are in place. And so, you have to think through, what does a recession mean for my portfolio? Now, if you look at markets don't seem to care about the likelihood of recession. That inverted yield curve in years gone by would have made a massive difference to equity markets. It hasn't. People are looking past that. And to me, that tells me that people believe that even if there is a recession, the central banks will cut rates. They're at 5% now. We'll be able to cut them down and everything will be fine. I don't think I think people have forgotten what a real recession looks like. The last one was really '08, and that wasn't so much a recession as a financial crisis. Go back to 2001 though, and look at what happened in that recession. It was a short, reasonably mild recession, and a different picture emerges of higher unemployment and equity multiples getting cut, and earnings getting battered. I mean, it's a very problematic time to be in the equity markets, particularly at valuations like this.
Okay, you mentioned a moment ago that a lot of people want to be invested in the sort of big name stocks. You've noticed that a handful of those big stocks have had an outsized impact upon the market. Why is this a problem? Is the investor love too concentrated?
Oh, look, absolutely it is. But it's like any love. While it's requited, it's fantastic. It's the best thing in the world. And so all the while these 7 stocks keep going up, it's magnificent. But when they turn, and they will get over expensive. And when the markets turn, they will be the first things that people sell. A, because the valuations are so stretched, and B, because it's the thing that everybody owns. When markets turn, people sell the things that they've got profits in to cover the losses elsewhere. So the downside of this will be just as vicious as the upside has been when that day comes. But for now, everyone figures they can get off at the last stop before the terminus, and I wish everybody well. I hope they all get off in time.
And then they pile all into gold or gold stocks?
Well, we'll see. I mean, we'll see. They take more convincing to do that than they do to buy like a sexy tech stock or an AI-related company. Talk about gold, and it takes a lot more to convince people that this is the next thing.
I mean, that's kind of curious, isn't it? Gold's had several challenges over recent years. The underlying conditions have generally been positive for gold. We've had the tech stocks, we've had crypto, we've had weed stocks. When do you think gold's going to get a break?
Well, let's think about that. When we talk about what gold's done, what people tend to refer to as the price. That's all they care about is the price. But you look at what's happened with gold, look at the fact that central banks bought more gold last year than they have since 1950, 1,136 tons I think they bought. We've seen stronger hands taking possession of physical gold. The price hasn't gone crazy, which for me is perfect, right? I mean, I don't worry about the price. I want to own gold. And people think about gold like they think about other assets in terms of, should I buy gold? I think, should you own gold? And it's a very different mindset. Once you're an owner of something, you view it very differently to something, oh yeah, I'm going to buy gold. That implies it's a trade. That implies I'm going to buy gold and I'm going to sell it when the price goes up. I want to own it. And at some point in time, I'll either need it, in which case, if the world has reached the point where I need my gold, I promise you the price is going to be a lot higher than it is now. It's not going to be a nice place to be. But if I don't need it, it's going to keep up with inflation. It's going to, over time, it's not going to cost me any money. It's never going to go to zero. And I'm much more comfortable like that, particularly in a world where I think it's time to play defense.
Okay. Well, gold is
defense. We're English. I can say defense.
defense. Gold is one thing. Gold stocks are quite another. The last cycle, gold companies were criticised for making some bad decisions, making bad investments at the top of the market, blowing out their balance sheets. Much of the past sort of 10 years or so, they've been sort of winding that back, repairing their balance sheets, getting to a much better and healthier financial condition. Investors still seem sceptical.
Oh, they'll do it all again. They'll make all the same mistakes again because they're humans, right? Everyone does that, and there's no mania like a gold mania. You think tech stocks are crazy? Wait till you see what happens when people decide that gold stocks are the thing they must have, because they don't have the bandwidth to take that kind of capital without some really crazy price moves. And when that happens, gold fever it's very real, right? There's something about gold that when people decide gold is where I want to be, they'll trample over their grandmothers to get to it. And so you'll see this stuff happen. And when that happens, the executives will do dumb things. They'll pay over the top for other companies. They want to acquire assets. They'll do all the things they've done before, and they'll screw it up. And that's generally when the bull market tends to end. So you have to go through that cycle. But I'm much happier having that in front of me because it means we've got to get there first.
Okay. Last couple of years, I've seen the gold sector, gold equities, evolve quite significantly with a number of mega mergers. Do you think we're done there, or are there more to come? And bearing in mind your comments about when the cycle really goes, the check is going to come out and go crazy?
It's bound to, because there just isn't enough gold in the world to fulfill the kind of demand that these big companies are going to have when this bull market gets started in earnest again. And so they will. The juniors will start getting eyed, and then the mid caps will start getting eyed, and then some of the big ones will. We've seen this so many times, and it's always the same because we're always the same. So that will absolutely happen. I think the big difference this time around that we haven't had for a long time is a much higher cost of capital. That makes a difference. Having 5% interest rates makes a big difference to some of the tickets that would have been written. Could they avail themselves of an influx of cash at 2% or 1%? Makes a big difference having to pay that. So that will keep them a little bit more honest. But the mania, the nature of it, will be the same every time.
When things move, they tend to move very quickly. It's very slow and boring for a long period of time, and off it goes. What do you think will be the trigger for the change in sentiment this time around?
Look, and that comes back to the first thing we talk about, is how complex a world it is. The number of potential triggers out there are endless, and new ones occur every day. And that's why I think for people investing in gold and commodities, this long-term perspective is so important. Because if you're trying to time the crazy run-up in a commodities bull market, you will get taken out by under woodshed day after day after day after day. If you look at supply-demand situation, you look at this need for commodities in a world where globalization is reversing, people are friendshoring, people are onshoring, people are building infrastructure themselves, building factories, and the build-out, as Nomi Prince was saying yesterday, the build-out of factories in Middle America is extraordinary. If you can take those things in and understand this is a multi-year process, it's not a multi-month process, then you can be much more comfortable about saying, well, I'm not need to worry about the trigger because I've got a tailwind here of a decade worth of investment that's needed in this space. The triggers will come, and hopefully I recognise them when they do, but in the meantime I've got a tailwind, and that's the most important thing, I think.
Okay, building from that, Grant, with as you mentioned, the build out of factories and other sort of infrastructure, that's obviously positive for industrial metals such as copper, nickel, aluminium, steel. Is that perhaps a better opportunity than gold?
It depends. It depends what your risk profile is. People throw all these things in together. To me, I don't think of gold as a commodity. To me, gold is money, and that's it. So I don't lump it in with copper and silver and rare earths and tin, or silver more so, but all these other base industrial metals. But for those, you have this tremendous competition for those. If you look at what's happening with the Belt and Road Initiative in Asia, the Chinese are building out an extraordinary amount of infrastructure there, which is going to need all of these materials. And I think more and more you're going to find countries that are stockpiling natural resources, because if you go back to what we spoke about with the sanctions, if you need to diversify your dollar holdings and you don't want to hold renminbi, you don't want to hold euros, you can stockpile copper, you can stockpile all the things that you're going to need as a way to diversify your dollar reserves out of treasury bonds, which can be sanctioned, and into dollar assets that if you don't need, you can use. So I think you're going to see a lot more people doing that and moving into these commodities at the kind of a national level.
I think it's interesting how that sort of folds in again into the sort of geopolitics.
Yeah.
Because you've seen China making very large investments in Africa and in Latin America, things like copper and things like lithium. The geopolitical battle lines for sources of raw material seem to be being drawn. And it seems that the West or the USA has been a bit slow to respond to that.
Yeah, because look, the US and the West have outsourced the manufacturing component for a long, long time now. And as markets and countries have become more financialized, the economies become more financialized, the stuff that you need to build, I flew into Washington Dulles Airport the other day. It's the worst airport I've ever been to in my life. It's shocking how old it is and how poor the infrastructure is at every level, from the bus that takes you from the plane to the terminal, to the baggage claim, everything. It's shocking to me. And that money hasn't been spent. And so, when you think about why the West is behind, they've been too busy making money out of money. They've been too busy levering up and putting money into private equity and putting money in the stock market and making money from money by financializing everything, they haven't had to look at, okay, well, what about raw materials? That day is coming. The only one they've really cared about has been oil. But they're going to start caring about an awful lot more of them. And whether they like it or not, they're going to get drawn into that world because these are vital commodities that you can't allow China to corner the market in any one of them, or the BRICS countries as a unit, coming together to raise prices on all their imports. It's going to be a very different world. And people need to understand that commodities' place in the world for the last 30 years, I think, and I could be completely wrong with that, this is what I truly believe, the place that commodities have in that whole ecosystem is going to be very, very different for the next 10, 15, 20 years.
Okay, I hear your point on Dulles Airport, but I'll call that in Raja LaGuardia.
Go through. No. You see, I agree. I lived in New York for 10 years. LaGuardia was awful. It's got nothing on Dulles, believe me. And they've now redone LaGuardia, so it's a lot better, trust me.
Okay, good stuff. You mentioned it's a very different world. Has China sort of got so far ahead in terms of resources, resource processing? China is the main game for lithium, it's the main game for graphite, it's the main game for rare earth elements, it's the main game for nickel, copper concentrates. Is it possible for the West to get back to more of a level playing field?
Yeah, it's interesting because people think of it as China getting ahead, right? But China have just kind of done the sensible thing with a very long-term perspective, which is what they've had over there, because they're trying to, they've taken a country that entered the WTO in 2000 and they've brought however many hundreds of millions of people out of poverty. So they have this much longer time horizon. So I don't think they're trying to get ahead. They're doing what is a sensible thing to do for an economy at that stage of its development. It just looks like getting ahead because we're not doing it. We're long past that. We've built all the highways, we've built all the manufacturing plants, we've done all that, and we're at the tail end of that cycle. We've offshored everything. And so are they ahead? Yes, if you're measuring this by how's the world going to be and what's the importance of commodities going to be, then yes, I would say that they're ahead. But that's not because they've been rushing to go, right, here's what we need to do. It's because everyone else has said, well, look at what the Chinese are doing. I mean, that's not fun. I mean, that's not sexy. There's no multiples on copper. It's just two very different stages of the economic development cycle and two very different mindsets. That's all.
Okay, thank you. Now, you recently began a video series called About Time, in which you interview some of the most inaccessible financial luminaries of the financial world. How did that come about, and what do you seek to show your subscribers through those videos?
Look, it came about through a desire to have meaningful conversations with people and learn lessons from them. It's very easy to get stock tips from people. It's very easy to have a 5-minute sound full of sound bites and a quick take on this or that, and that's great. There's a need for that. Personally, for me, that's not what I'm interested in. I want to sit down with someone for 3 hours, which sounds really daunting, but you don't have to watch it all in one go. But you get 3 hours with someone to talk about their life and their career, and the crossroads they've come to and the decisions they've been forced to make and how they made those and why they made those and what went right and what went wrong and how they dealt with success and how they dealt with failure. There's real information in that we can use in our careers, in our lives, for decades to come. It's not a moment in time and a snapshot of a chart and said, buy Apple at this price because I think there's a breakout coming. That's useful on that day, but understanding how someone like Frank Giustra faced problems in raising money for one of his mines and understanding, okay, how did he get around that and why did he think the way he did? That's something you can watch in 10 years' time and learn another lesson from. So that's what I try and do. I just create these conversations, try and take people inside the minds of successful investors and thinkers and give them access to their thought process. And that, to me, pays dividends over a much longer time frame than a stock tip.
And how is the actual the recording of that? I mean, relaxing somebody to talk for 3 hours, would you have some breaks?
Look, I go to their home to do this so that they're at home, they're comfortable, they're in their own environment, and we sit and talk for as long as they want to talk for. And some of them go for 3 hours. I had one that went for 6 hours, and I literally looked outside and it was dark. I was so engrossed in the conversation, I had no idea what time it was, and it was dark. And some of them will go for an hour and a half. And the point being, there's no clock on the conversation. The conversation will go where the conversation needs to go until either they're bored of listening to me ask them stupid questions, or they've got to the point where they're like, all right, I'm kind of done now. And so, by doing that and by letting a conversation run its course naturally, like we all do in our everyday lives, you tend to get a lot more out of people than you would putting them on the spot and saying, okay, so what do you think about this? You know, it's a much more natural, organic way to get inside someone's head and learn from them.
Okay. Now, you're speaking here at the Rural Symposium. What are you going to be talking about?
Well, ironically, I'm going to be talking about the dollar. I'm going to be talking about the dollar as reserve currency, as reserve asset, the BRICS countries, competition, how it got to be as important as it is, its predecessors and what happened to them, and how people should think about this debate as to whether the dollar is going to remain the world's reserve currency forever or go away tomorrow. You know, the answer is somewhere in between those, and I'm going to try and give people a framework that will help them think about that, because I think it's an incredibly important topic to understand.
Okay, absolutely. Now, prior to sort of coming on air, we sort of having a chat, and you said you sort of tend to do these things sort of, 4 times a year. Or
Give or take.
Your presentations change much, or the narrative perhaps doesn't change much, but the way you deliver it?
Yeah, no, I every time I do, I want to try and tell a story, because I think we are, as humans, we are hardwired to understand the world through stories. And so when you're trying to explain something as complex as the global reserve currency system, it helps to be able to do it with a story. Last time I've given presentations here that were based around Willy Wonka and the Chocolate Factory, and one was around an Aesop fable, The Boy Who Cried Wolf. And I've done one around P.G. Wodehouse, and I've done all these kind of crazy stories. But the reason being, if you're telling an audience a story, they know there's a beginning, a middle, and an end, and they will sit through and they'll follow that story from the beginning through the story to the end. So you can actually take them by the hand and walk them through a set of suppositions and a set of data that you want to lay out your story, and they'll come with you because there's a narrative through it. If you keep bombarding them with charts and say, oh, and here's a chart of this, I've done it myself, people kind of get lost and they turn their phone on. If it's a story, you're kind of conditioned to listen to it and stay with it. So that's what I try and do, and they're great fun to put together, and people seem to enjoy them, and they're different to the other presentations. So I always look forward to giving them, particularly here. Rick's a dear friend of mine, and we always have a bit of fun this week. So it's I'm looking forward to tomorrow.
Excellent. Well, I think the entertaining aspect is a key part of delivering a message, because as you say,
I think so too. Yeah.
Get people engaged and stay engaged and remember the content. I'm looking forward to your presentation tomorrow. Grant Williams, thank you very much for joining us today.
Paul, great pleasure. Thanks for having me.
And stay tuned to Kitco Mining for more from the Rural Symposium in Boca Raton, Florida.
Kitco Mining special coverage of the Rural Symposium, Natural Resource Investing, is brought to you by G Mining Ventures.